Hello everyone, I hope you're well, hope you're doing alright. So, first observation for the day right here is for US oil on the 2 hours time frame. I've highlighted this zone right here. 1, 2, 3 drives to the upside. Market then melted into the beginning of that 3 drives pattern. When the market usually does that, we tend to receive a small retracement. Now, as the market was going down as well from here into here, what we did is 1, 2, 3 drives into the beginning of that previous 3 drives right here, and therefore I believe that for US oil we can receive a small retracement to the upside right now into these stops right here, into these highs right here, take out this high maybe, and then see where we go from there. Then I will reanalyze once we get above this point right here. Let's see how that goes. Today is Monday the 25th of March, and I just found this US oil trade. This is my only trade for the day. I already shared my observations for the day on multiple pairs, including oil going up today. However, I haven't found any trades for GBP AUD, CHF JPY, and EuroCAD, or any high quality trades for them, and therefore I have decided not to trade CHF JPY, EuroCAD, and GBP AUD. We'll talk about that later. So today I am only going to trade US oil, and the only trade that I'm going to be considering is this one right here. Now let me talk about that trade a little bit. Let's go to the 90 minutes first and analyze the price action on the 90 minutes right here. What the market has done on the 90 minutes is it has pushed already a lot to the downside. 1, 2, 3 drives right here through to the downside to take out these bottoms right here. After taking out these bottoms, I do expect oil to retrace a bit through to the upside. Now, after grabbing these lows right here, the market impulsed through to the upside right there, indicating that we might get a sign that the market is going to go through to the upside. Now, as I go to the 30 minutes time frame, the first thing that I look at right here, the first thing that really just grabs my attention is the fact that the market is moving slowly to the upside right here. As you can see, 1, 2, 3. So we are creating a lot of liquidity through to the downside right now, and therefore what I'm going to do right now, the way I'm going to handle this position, because we're creating a lot of liquidity to the downside, is I'm going to be taking partials right here at 1-to-1 risk to reward ratio. Okay, and then I'm going to be letting the rest run into my target up there. Okay, that's the way I'm going to be handling that position right here. As you can see, what US oil did on the 30 minutes is even more clear. It's clearer. The market pushed down and grabbed these lows right here, and then it started reversing right there, and this is the trade that I am going to be taking, and let's see how that goes. 1-to-1 partials, and then as soon as I take, by the way, 1-to-1 partials, this is why I like it so much. The reason why I like 1-to-1 partials is because if you book 50% of your position at 1-to-1, if the market comes back to your SL after doing that, this is a BE trade. So it's a big risk management advantage when you take partials at 1-to-1, because as soon as the market comes back to your SL, you get out at BE, it's done, and then you move on. So this is the way I'm going to be handling that position right here. As we can see here for oil pushed into our $82 area right here. Now, this is why I love taking partials as opposed to trailing my SL to BE. As you can see, if the market pushed up into this 1-to-1 area, and then I trailed my SL to BE point, the market would have came back to my entry, pushed me out of the markets, and then pushed heavily in my direction. I allow the market to linger. I understand that the market don't have to suddenly push up and hit my target, that it can linger around and then push up and hit my target. And therefore, I allow it to do that by simply not trailing my SL to BE and instead taking partials around the 1-to-1 area as explained before. Now, because I took partials right here, I received the benefit of protecting my position, which is why you trail your SL to BE. You usually trail your SL to BE so you protect your position. In case the market wants to come back, you get out at break-even point as opposed to take a loss. Now, when I take partials around the 1-to-1 risk-to-reward ratio, the market can still come back and hit my SL, and this would still be a BE position because all it eliminates eliminated is the partials right there. And therefore, I get this protection without the fear or the danger of the market coming back to my entry, pushing me out of the markets, and then pushing in my direction. This is why I love partials more than trailing or SL. As I said, the market can linger. Now, this will be the end of this video. If you'd like more of that, feel free to subscribe, notifications, all the YouTuber stuff, and I'll see you guys in the next video.